If you have not seen the previous 2 episodes, you can go watch them. You don't have to, whatever. I'm just going to do a quick little recap. So basically, we've come as far as designing a very, very small, simple trading plan that we're going to try and execute and build a whole trading system around it. Basically, what we're looking for is a trending market. We're looking for technical areas of supply and demand, or demand, something like this, something like this. A lot of you probably already know everything about there is to know about these technicals, about how trends work, how supply and demand areas work, what order blocks and all of that ICT crap is. But we're going to try and keep it as simple as possible, right? Trending market, supply and demand areas, but we're also adding a little bit of a confirmation, which would be the a confirmation tool, which would, in our example, is going to be the RSI, or the relative strength index. It's very simple. Once price comes above 70, it's a sell confirmation, and once price on this chart below here comes to 30 and below, it's a buying confirmation. It's very simple. If there's anyone watching who's been in the game for a little bit longer, you're going to know that before all of this ICT, SMC stuff, the RSI was actually one of the first things that newbies were taught. So I thought it would be fun to maybe try and work on a system that includes the RSI. So here we have the Australian dollar versus the US dollar 1 hour time frame. I swiped the chart a little bit to the left, trying to do some back testing, and I've drawn up a couple of trades that we're going to take a look at and see the statistics and see if this kind of a system has any potential, profit making abilities or whatever. Basically, what we're looking for is a demand area right here, breaking previous highs. You can mark it however you want, or however you know to do. Just make sure to keep consistent with your execution. Price breaking previous highs, creating an area of demand, price retracing. The RSI level is met with the buying signal, so we enter a long position and we get stopped out on the first trade. Same thing happens here. Long position on this lower candle somewhere in here, probably stops somewhere below previous lows, targeting 1 to 2. And eventually we get stopped out. Okay. Third example, again, price pushing down, breaking previous lows. This is now an area of supply, retracing into that area. The RSI index gives the sell signal, price pushes down, almost hitting our take profit levels, and then bouncing back up to stop us out. Another example, demand breaking previous structure, retracement, RSI, buy, and in 10 days we have, this is a long trade, in 10 days we have our first winner, and so on and so on and so on. The same thing happens again and again and again. There's winners, there's losers, there's everything in between. I'm going to show the stats on the screen here in a second. But this is where the real work begins. Okay, so now we have this very, very basic technical framework. Okay, you know what you're looking for, but that's only on the surface, right? You don't have any relevant data yet. You don't have any live trading results. You don't have anything. What you're going to do now, or what I would do now, is backtest this a little bit more, right? I have, 20 trades here, 15, 20 trades here. You need 100, 200, 300, 400 trades to have any relevant backtesting data, right? After you have that, then you move on to the live phase, right? To the live markets. You're going to see if backtesting and live data have anything in common. Like, can you actually reproduce what you see when the candles already exist? And after that, right, live testing is actually what brings meaningful results. And when we have that, we can then understand if what we're doing even has potential, if it has long-term positive expectancy, because that's the only thing that's important in trading. Expectancy, positive expectancy, based on data, based on math, based on very simple statistics. And that's exactly why we journal trades, especially when we're doing them live, when we're executing them live. We want to know how big our stops are. We want to know how big our take profits are. We want to know when to enter the market exactly, right? Because with all of this data that we're observing, we can then later optimize, right? When we have a bunch of data, you can see, I don't know, 50 pips stops simply don't make any sense, right? Because the price on winning trades never really comes close to the stops, but on losing trades, it doesn't even matter, right? So then you could optimize and maybe cut your stops in half, maybe reduce them 20-30%. At that point, if you're leaving take profits as they are, you're already increasing your risk to reward ratio. So that already increases profitability if you're not sacrificing the win rate, of course, etc., etc., etc. So it's all of this fine tweaking and tuning that you can do that doesn't really have anything to do with what you're doing on the charts, right? All of that happens later when you have the data, when you collect the data, when you have screenshots, when you have all the data written down. So that is where the real work comes in. That's what most people don't understand when it comes to trading. They believe that if we replace what we're seeing right now on the screen, if we replace that with a typical ICT thingy, right, that everything suddenly becomes easy. No, it doesn't. It stays absolutely the same, right? The goal is to identify optimal entry, stops, and take profit levels. Understand when or if even we're placing stops to break even, if we're trailing stops, what makes the most sense. We're looking for optimal results, right? We're not just deciding something and sticking with it because we feel a certain way about something. That doesn't make any sense in trading. That's not how this thing works. And you can see here that all I've done was basically the same thing over and over and over again. And yes, you could argue that in the time period that I've tested, there were multiple trades more to be taken. Sure, maybe there were some that I didn't notice because I was doing this quicker, a little bit on the quicker side. Maybe there were some that don't fit the system entirely, and that is the point of doing this, because you want to identify what goes and what doesn't. Maybe this system wouldn't work in its current state, right? Maybe it needs a lot of tuning, a lot of tweaking. Even though there is a positive return in this short time period, that doesn't mean anything on the long haul, right? This is just the beginning of everything. And this is just one currency pair, right? You can take this exact strategy and you can apply it to any currency pair. You can apply it to Bitcoin. You can apply it to, I don't know, commodities, futures, whatever you want to trade. You can test similar things. You can add indicators. You can remove indicators. You can go naked. You can do whatever you want. The point is you have to collect data. You have to test, you have to optimize, and then once you do all of this stuff, and just let me tell you, you're never gonna get it perfect, or you can surely get close, but you're never gonna get it 100% right. The only thing that's important is that you understand what you're doing and why you're doing it. In trading, the only thing that matters is positive expectancy.